Hi guys, it's been a while, eh? Yeah, it's been a long time since I posted something on the channel, but be that as it may, it's not like the group was not going forward. We are moving forward as a group, though I would like to urge people to put in more effort in understanding the concept that I'm teaching you guys. So yesterday, one of the guys in the group asked me what were my thoughts regarding gold, and we had a discussion on it, and I sent in some charts on the group so that everyone can come to the forefront and be in a position to analyze and see what gold is likely to do. So that was yesterday. So I managed to open a long trade, though most people were saying gold is gonna fall. Most people were seeing gold as an asset that was offering good selling opportunities, yet it was the other way round. So I'm going to explain and show you guys why I came to that decision of going long on the precious metal. So if you're in the group already, you know where this topic is going and where it's coming from. And if you're not, then you might need to look in joining the mentorship, where I help people on how to trade using institutional supply and demand. So first things first, when we look at gold, I don't want this video to be a long one. I just want it to be short and precise, straight to the point. So when we look at gold, the reason why many people are seeing selling opportunities is because, yes, we're at extremes in terms of price. 17, 18 hundreds on gold, those are like extremes to the upside. But now people tend to ignore like the fundamentals, what's going on around, and what is DXY doing. You see, what is the dollar doing in relation to gold? People just look at the technical chart and they don't include the fundamental aspect, because remember, gold is driven mostly by fundamentals. So when we look at it from a higher time frame, you can clearly see we had November, we had September and October. There were strong bearish months. Price was bearish to the downside. But now come December open, you can clearly see where December opened here. That price point, the 1776, we're just gonna round it off to 1780 per ounce on gold, which is an institutional price point. That price level, when you look at it from a higher time frame, I'm just gonna zoom out a bit so that you can clearly see what I'm talking about. You can see we've got these highs here. We have these old highs that were broken to the upside at this price point here, right? You can see we had July breaking all the way to the upside and breaking above old highs. Now, what is it that rests above old highs? There is liquidity. What kind of liquidity? Buy stops, right? So once you have done that, you have already seen the structure that I have described here. We've got price now coming back into the July open, which was a strong bullish to the upside, which closed way above these highs here. Let me just highlight the highs that I'm talking about. So we got these highs, and then we also have this high and this high. So when price broke above here in July, when price action broke above and take out all these highs in 1 month, that would have been an interesting point in your price reading. You see, you need to understand the opening of that month was critical. And also you can see we have got this last up candle here, the one before the highs that were broken above, this up candle. That was our bearish order block where we were looking for short trades. But when July closed way above here, what did that do to the bearish order block? It was engulfed. So that was a supply zone that was engulfed. So what do we do when price comes back to that zone now? That brings us to the current price action. I hope you understand what I'm saying. It brings us now to the current price action. So now let me just clear up these drawings. Now when we look at current price action, remember on a monthly chart you need to first look the last quarter. If there's no emphasis in relation to your current price, then you look in the last 6 months. So when we look in the last 6 months on gold, we had a new level of demand that was created here. The July opening price 1776 or 1780 institutional price point. We had a new or an original level of demand that was created. That's why we saw a rally to the upside. You see this July price action, that's only smart money that can move price like that. That was a sharp move to the upside, and then we had a secular return to the same level. That's why I was basing my long trades on, because I was expecting whoever bought gold, as in the institutions that bought gold in July, they won't want the price to keep going to the downside. Why? Because they're gonna lose. You see, retailers, they're gonna make money, they'll be selling, because everyone, even today, one friend of mine just said, no, I'm gonna be selling gold, and I told him, no, don't do that, that's suicidal. You must be looking to go the other way around. So like I always tell my students, you buy when everyone is selling, then you sell when everyone else is buying. But you need to know the right time and the right entry points, which is what I teach in the group. So now, once we have done that on a monthly, you already know that you're looking for long opportunities. Then you drop to a weekly time frame. Now, when you drop to a weekly time frame, what are you looking for specifically? You're looking for the candle that broke to the upside, right? You see here, this candle, it broke to the upside, right? Determining our opening price of the new demand zone. Now I'm on a weekly chart, right? I've just dropped down to a weekly chart. Now you can see already I've got a range. My 1 week opening price of July and my monthly opening price of July. You can see already the range that I have here. That's the range that I have got, right? I hope you understand perfectly. Now, once you have done that, you already have your target set. You go to a daily time frame. Now, why do I keep going to a lower time frame? Because if you look at it from a weekly point of view, right? This is our last down close candle, right? I'm just gonna mark it quickly. You see, that's our last down close candle. See, I just marked the body of it. But now if you look at that range, the range is quite big, but it's in that range now that you're going to be hunting for what? For long entries. Now, I always tell people, look to go long on a bullish order block, at least at around 50% of the bullish order block. If you're going to be selling, you need to go short at least at the 50% of the bearish order block. So now I highlighted the bodies candle, which determines my institutional selling. 1827, that's your 50% price point of the body of the candle, meaning you'll be looking to go long in that price zone. Any price closer to 1827.30, that is where you'd have been looking for long entries, right? Now let's go further. Now, but before we go further, I want you to understand one thing. Since we have already taken note that we are looking for long entries, right? Let me just hide this guy here. Since we are looking for long entries on the precious metal, now you need to determine where is the money, right? For the institutions, for them to accumulate longs. And if you're looking to go long as an institutional trader, what do you look for, right? You're looking for long liquidity. Long liquidity comes in what form? Sell stops. I don't need to explain what sell stops, because if you're in the group, you already know. If not, then the link that I shared with you guys yesterday, it can explain that properly. It's one of the first lessons that you have to go through when you join the mentorship. So now when we look on the weekly chart, already we've seen that the last week of November there was rejection, so meaning our long opportunity this week was presented perfectly. Now you need to understand where is liquidity, right? Number one, you grab your trend line 2. You can clearly see here below these lows, right? We've got what? We've got sell stops below the low, right? We've got sell stops. I'm just highlighting the area where there's gonna be sell stops, guys. Just bear with me so that you know that everything is clear, right? Some are gonna ask, but Ivan, why are you marking that area as an area where your sell stops are? Because everyone who went long or who's expecting a breakout to the downside, they've got their stops there right below. Remember, stops comes in two forms. You've got stops as in stop losses, then you've got stops as in orders that are waiting to be filled. Now if we are going long, we'll be looking for sell stops. Institutions, they'll be looking for sell stops for them to pair with their long positions and move price to the upside. So now we've got sell stops below last week's low. Now I've marked that level. Now I'm going to go to a daily time frame. Now you can see we've got this week's low. This week's low, which is coming in right there. You see that low? What does that tell you in terms of liquidity being engineered? That's manipulation. That's stop hunt, right? When you see, the moment I saw that low spiking through an area where I was expecting to have a lot of sell stops lying in, you see these lows here, 1 2 3 4 5 6. When this price action spiked through, it means it cleared most of the stops below. That's why you saw this rally to the upside that we saw today, right? So I was expecting price not to even come back below. That's why in the group I mentioned, I sent even the chart to say, guys, look at this price action, start it perfectly. Unfortunately, no one even came back to me regarding that chart. Up to now, I'm still waiting. So now once I saw this wick here spiking through old lows, that means they've paired their long positions with the liquidity. That's money for them, which is also money for me as an institutional trader, like with the concept that I'm using. That in itself is the trigger for me to be hunting for long opportunities. Right now, if I bring back my my trade levels, then you're gonna see. So this is the trade that I opened with the 0.13 lot size, and this trade I opened it yesterday. This trade was opened yesterday, and so far we've got a rally of close to 270 pips, and at one point it was close to 300 pips, and I'm still in this, I'm still holding this position. As you can see, let me just zoom out a bit. I'm still holding this position with my target set at around 1870. Why 1870? Because that's where I expect the bears to at least fight back. So now I hope you have understood how I came to that decision of buying gold. The other factor in terms of fundamentals that I considered is because of dollar being so weak. Dollar is very weak right now. So remember, if dollar is weak, you're gonna see funds pouring into gold and yen. They're like the so-called safe havens. So in terms of fundamentals, everything was aligning properly. So now what I'm just gonna do is I'm gonna trail stop the position. I'm gonna trail stop the position once I've reached at least 70% of my target. So I hope you understood perfectly why I was anticipating long positions on gold. As you can see, that's a trade that any one of you guys can take, but you need to know exactly what you are looking at. You need to know exactly what the technical chart is telling you. Like I emphasized to the guys, understand what price action is telling you. Forget about the retail mindset, guys. Yes, you can use retail mindset to confirm, but don't let it be your basis of your analysis, because retail mindset is gonna make you cry. You must understand that you are always gonna be giving money to the market. You always be giving money to guys like us. When you're selling, me, I'll be buying. Then you'll be asking yourself, okay, but why is Ivan buying? You see, so retail mindset, things like head and shoulders, they need to come later on in your analysis, or not even. You see, because those price action patterns, they're clearly there for everyone to see, right? Ask yourself this: am I the only one who's seeing this pattern? 4 or 5 of you seeing the same pattern. Do you think the trend is going to go in your direction? No, the market is doing exactly what you want to do. Think outside the box. Just think the other way around. So yeah, this is what I wanted to share with you guys, and I hope you can take 1 or 2 notes from it. And for those who haven't subscribed to the channel, kindly subscribe so that the community can grow, and it also motivates me to keep uploading videos. You can share with your friends the channel link and everything, and ask everybody to subscribe. And if you haven't joined the mentorship, kindly get in touch if you want to join the mentorship. We're not forcing anyone to join though, and because you're gonna need to work hard for you to join the mentorship. There's a lot that we teach in the group. So yeah, I hope this information will be useful to you guys, and I wish you all good luck and happy trading. Thank you.